Greetings, our viewers. Welcome to another session of the TBA Videocast program. I'm your host, Dan Tandas, working with Tanzania Bankers Association. And today we're having a fantastic guest, the former CEO of Stanbic Bank Tanzania, Mr. Kevin Wingfield. Mr. Kevin Wingfield, you're welcome to the program.
Thank you.
Thank you very much. We are going to be talking about quite a number of topics today, but more specifically on leadership and a little bit about the banking sector of Tanzania. Maybe to start our conversation, can you just share a bit of your career highlights in leadership more specifically?
I think I was lucky that I always knew what I wanted to do. I wanted to be a chartered accountant. I had a senior member of my family who was a chartered accountant, and so at a young age I was inspired by him, and that's what I decided to do. I spent a number of years. I was fortunate to spend a number of years with PricewaterhouseCoopers. Once I had qualified in different jurisdictions, South Africa, Australia, Hong Kong. When I decided to leave the profession and move into the private sector, I spent time with one of the largest fast-moving consumer goods companies in South Africa, which was a fantastic grounding in terms of understanding manufacturing and getting a better sense of how business runs. And then in 1998, I joined Standard Bank in the Africa business as the chief financial officer for that business. And I'd never really thought about going into banking, but I think once I landed there, it was an amazing experience. I was fortunate, obviously, to grow my banking knowledge and deepen my understanding of how a bank operates and the commercial dynamics around banking. And then increasingly, as the CFO, I started getting involved in acquisitions across the continent. As we look to continue to enter new markets and to scale in markets where we didn't necessarily have scale. So I was fortunate enough to be involved in transactions in Malawi, Mozambique, Kenya, Nigeria, Ghana, Lesotho, Uganda. And that really gave me quite a broad understanding of banking, right from the corporate investment side down into retail banking. And then I was lucky enough to move into what in retail banking, or what we call personal and business banking in Standard Bank. Also still working in the Africa regions team, and that then obviously started to grow my deeper knowledge of retail and commercial banking. And then I was fortunate to be asked to go and look after the PBB business in our Ghana operation in 2010. Spent 4 fantastic years there, working with the team to grow the business. It was a very small retail business at the time, and we certainly we made great strides in growing that business. In fact, the bank today, which was a greenfield bank, started in 2001, is the 3rd biggest bank in Ghana now. And then went back to Johannesburg in 2013 to look after the distribution for Africa regions, so the businesses outside of South Africa. Which again gave me a perspective of a much deeper perspective of digital technologies, of distribution, physical and as I say, digital. And then in 2015, I was fortunate to be asked to go and take on our personal business banking business in Uganda, which was a big business, but was needed a bit of new momentum. And I spent 5 fantastic years working with the team there to grow that business. And then in late 2019, was asked to consider coming to Tanzania to take on the chief executive role with the bank in Tanzania. So all of those roles have been very different. Some have been growing a business. Some have been taking a good business and that was facing some challenges and working to put that back on track. And then here in Tanzania, it's really stretched me in terms of leadership, of dealing with with ambiguity, dealing with a lot of challenges, and particularly around whether it's risk environment, a lot of regulatory dynamics, and all of those things I think have given me a much better understanding, broader understanding of different markets. Yeah, I think some of the leadership things I take away is really getting back to basics, is trying to be honest and open with people, create trust, and it's been for me a fantastic journey. And looking back, I think as a banker, it's been a great opportunity to build a legacy, but to be able to look back and say, in a small way, made a difference to the businesses that I've been involved in.
Looking at the background that you've just shared with us, it's quite a long and very impressive career, particularly in leadership, and as you have shared. What are some of the lessons that you'd like to share with the rest of us? A lesson that you think could inspire the next generation of leaders here in Tanzania and in Africa in general?
You know, for me, there's a couple of things around leadership that I guess I strongly believe in. I think the first is that I try to stay grounded. I try to be authentic. So what you see with me is what you get. I don't have any hidden agendas. I think integrity is really important. I think you need to be true to your word and always do the right thing. Sometimes doing the right thing might not be pleasant, but you have to do what's right. I think I work hard at building trust with the people that I work with. I have a very I think to be successful in banking, one has to be very focused on your key stakeholders, and probably your most important stakeholder is your customer. So I do, from a leadership perspective, try and spend a lot of time with my customers. And then I guess the second key stakeholder is your staff and the teams that you work with. And really to make sure that I build those relationships. I try to understand where people are coming from. Everyone that you work with is different. I've been fortunate, as I said earlier, that I've worked across a number of jurisdictions where the nuances, the cultural nuances are different. I think I've been able to be adaptable, and I think that's another key leadership trait, is that you need to be able to be adaptable to different scenarios. I think what's really important going forward is to be able to embrace change. I think we live in a world that is changing so dynamically, at such a fast pace, that one really has to be able to embrace change and see it as an opportunity and as a positive rather than as a negative. And I think that's something that I've been able to do very, very successfully through my career. I think I have some principles that and I've mentioned some of them. I think the other thing for me is I have a strong belief that people are the only and real differentiator that we have. So I really work hard to make sure that I can build strong teams around me. And that's and I think if I look at sort of some of the things that or the business that I've worked in and where things have worked well is where I've been able to build a strong team around me. And then I think one has to also then be able to empower people. Let them, once you've created that strong team, let those teams get on with it. Set the guardrails, and then let people execute what needs to be done. And then I think finally for me, I think we overcomplicate leadership. It's really about often getting back to basics. If I look at some of the businesses that I've got involved in, and I reflect on what are the things that we did to grow the business, or to improve the business, or to turn it around, it really very often has been just getting back to doing the basics really, really well.
Yeah, so just to do a follow-up question based on the lesson that you've shared. You've talked about staff engagement, staff appreciation, you have talked about integrity, plus many other key lessons. Now just this question about the fact that we went through a very difficult time as an economy during COVID-19, not just Tanzania, but the whole world. How was leadership very important during such a difficult time?
I must say, for me, it was a real challenge. I landed here right in the middle of COVID, so I took over in April 2020. And in fact, for the first 4 months that I was responsible for the business here, I wasn't even on the ground. I was stuck in Kampala in lockdown. So I was responsible for a business that and working with a team that I'd met once. And so that really forced me to remain connected with the team. So you really have to make sure that you stay close to your key stakeholders. I think building those relationships and understanding people better became really important during that time, and not just understanding people from a work perspective, but understanding some of the things that sit behind that. What are the things that are important to them? What are the dynamics in their outside of work? Because those things became really, really important for people during COVID. So I think just that ongoing engagement, getting to know people better, I think really showing a strong level of a sense of appreciation of some of the challenges that people were going through. Obviously you had people that were working in your teams who had relatives who were ill, who lost relatives, and so you really, I guess, had to show a huge amount of compassion for the teams that you were working with. And I think the other thing that one had to be is flexible. None of us, it was uncharted territory. So each day brought new challenges, the things that you hadn't anticipated, and so I guess you had to learn as you went. I think from an industry perspective, it had many dynamics. I mean, certainly I think it drove or enhanced our focus on the digital journey, for example. But in many ways, I think one of the positives for me is that it also forced you to really connect, not just, as I say, with your staff, but also with your customers. Because now no longer were you necessarily seeing them face to face all the time. You had to actually be really proactive at reaching out and engaging with them to make sure that you stayed connected.
I would like to know a bit more about Stanbic. Stanbic at large as a bank, one of the oldest banks in Africa. Stanbic Bank has been in operation, Standard Group has been in operation for more than 160 years. What have been the major achievements across Africa, and how is the outlook for Stanbic Tanzania?
So Standard Bank has been around for over 160 years. We actually started we're a South African bank. We started in 1862 in the Eastern Cape in a town called Port Elizabeth, where we started banking the wool farmers actually. So Standard Bank has a very long pedigree in agriculture, interestingly enough. And then when gold and diamonds were discovered in Kimberley and in the Witwatersrand, we then started banking the miners. So we also have a long pedigree in mining. Anyway, so we have a long history. We were part of the Standard Chartered Group at a point in time. We were the Standard Chartered Group at one time. And then Standard Chartered exited South Africa in the 70s, and so Standard Bank became wholly South African owned, and then started to grow its presence outside of South Africa again. I think that culminated in an acquisition we did in 1993, which was we bought the Africa banking assets of ANZ Grindlays, which gave us a presence in a number of countries. And then over the last, as I say, 30 years, we've continued to grow that presence. So currently we have presence in 20 countries across the continent. We as a bank, we are an African bank, so we're wholly focused on Africa. We don't, we're not looking to grow in other markets outside of Africa. We're the largest bank on the continent, we're a full universal bank, so we offer services right, from corporate investment banking right to retail banking. It obviously varies depending on which markets we're in. And I think where our success has really been on making sure that we follow our customers. So we work hard at staying close to our customers, providing the solutions that our customers are asking us for. And that's part of the reason why we've continued to expand across the continent, is that as our customers have grown and expanded across different parts of the continent, we've needed to make sure that we can support them. Our purpose as a banking group is Africa's our home. We drive our growth, and I think as bankers, that I think it resonates really well, because that's really what we're about. Is how do we make sure that we play a meaningful role in growing and intermediating in the economies in which we operate. How do we connect economies? So how do we support trade and the dynamics around the interconnectedness of the continent and of the continent to the world? And there we have a presence in terms of doing that and supporting that. We have a presence in all of the key international centres, whether it be Beijing, London, New York, Sao Paulo, Dubai. Those are the things that allow us to be successful on the continent. We run a very integrated businesses across the different markets in which we operate. We certainly believe that we play a key role in supporting trade. So as a banking group, we are working very closely with the Secretariat in terms of driving the Africa Continental Free Trade Agreement. We believe that is going to be, has the potential to be transformational for the continent from a trade perspective. We focus a lot in the markets that we operate in supporting the agenda of governments. So whether it's in terms of supporting government directly, supporting government from a policy perspective, supporting government from driving the key focus sectors in the markets that we operate. Those are all things that we do well. And then I think the final thing that I would mention is that I think as a banking group we manage we have an ability to manage risk very well over time, and that has allowed us to continue to grow and build a sustainable business over time.
Mr. Kevin, I would like to touch on the question of leadership that we spoke about earlier on, that you shared quite a lot about it. You've been a member of the Governing Council of Tanzania Bankers Association. Looking at the organization today and the time that you spend with the organization, what sort of areas that the organization should focus on as a private sector organization for the banking sector in Tanzania?
The financial services sector and I guess banks in particular are a critical component of creating that financial intermediation that helps to grow and facilitate growth in an economy. And so I think what one wants to try and achieve is a banking industry that continues to grow, but that is also sustainable, but that also meets the needs of the markets in which it operates. So if I think about that, then some of the things that the TBA needs to be driving is to support the industry in achieving those goals. So as the industry body, how does one then create a framework that drives the right policy or thinking around the right policies, the right policy implementation, that creates an environment where the industry is able to operate and deliver solutions to the market, to customers that are relevant, that are affordable, that are accessible, and all of those things. Because ultimately you want to broaden access to financial services. I mean, I think we need to recognize that in Tanzania, the access to financial services is still quite narrow, and to banking is very limited. Actually, when you look at the numbers, and I guess we've just seen the FinScope report, which shows that we've seen some progress, but it's still very slow progress. So I think the key role for me of the Tanzania Banking Association is to engage with the various stakeholders to make sure that we can create an environment where the industry can play a more broader role in supporting the growth of the economy, financial inclusion, driving trade, whatever it might be. But at the same time is also working with the stakeholders, regulators and so on to ensure that we have a sustainable industry, that the industry is well managed, is well governed. So yes, you want to be able to support that and create an environment where you can grow, but you need to do it with very clear guardrails. And so for me, it really is, that's the role that TBA needs to play, is supporting the right policy, driving the right policy outcomes, driving financial inclusion, and that could, as I say, is around policy, but it's also around creating awareness of financial services and the role that financial services plays. I think it's also about coordinating the different role players in financial services. So TBA represents bankers, but there are many other players, whether it's the mobile operators, whether it's the fintechs who are emerging in playing a role. As I said, you've got many other stakeholders, regulators, government, etc. How does TBA bring all of those together to ultimately create that environment that allows the industry to grow, allows the industry to be more relevant to the economy and to the drivers of the economy, as well as ensure that it operates in a sustainable manner.
Yes, you have touched on the financial inclusion issue, which is quite a recent topic here in Tanzania, given the fact that the FinScope survey report was recently launched. And we know that in 2017, financial inclusion was 17%. And now in 2023, it is 23%, a modest increase. And I'm specifically speaking about the banked population in Tanzania. Financial inclusion in Tanzania has been very much driven by mobile money. And we would wish to see more Tanzanians using banking services. And you are from markets where the banked population is quite high, particularly South Africa. What do you think as an economy we need to emphasize on so that we can bring more people into utilizing banking services?
Yeah, that's right, Dan. I mean, and I think one has to just understand, first of all, that each market is different and unique. So we can compare ourselves to other markets, but as I say, the dynamics in the Tanzanian market, for example, are different. I think for me, the first thing we need to recognize is that in Tanzania you have a very large young population, a population that is, if you look at the distribution, still a large portion of the population still lives in more rural areas than urban. So for example, South Africa is much more urbanized than rural, so the dynamics are very different. And then I think the other thing that came out very clearly in the FinScope survey is how people earn their income. So your population of people who earn a fixed monthly income, for example, whether it's a salary or whatever, is still very small. And typically, I think the reality is that that's the market that banks have catered to in the past. And whereas I think mobile operators, for example, have begun to be able to or provide solutions to those customers that potentially don't have a fixed income. They have more irregular type of earning, whether because they are in, for example, agriculture, which is seasonal, or they're running small businesses that could be seasonal, or have very small levels of revenues. So the market dynamics are different. However, having said that, I think there are there are some things that we can do as an industry. I guess first and foremost is the dynamics around accessibility. Obviously for services to be available, they need to be accessible. And I think as an industry, we are doing some positive things. I think the fact that from a physical distribution perspective, we are much more accessible, whether it's through the initiatives around agent banking. I think digital can play a significant role in providing access to financial services, as has been demonstrated by mobile operators. I think but it's incumbent on us to, as an industry, to develop those solutions that are relevant to those particular customers. And I think if we look at the solutions historically that banks have offered, they haven't necessarily been relevant to that huge customer grouping that's out there. I think the other thing that's really important is affordability. How do you make those access to banking services affordable for people? Things like digitization will become really important in lowering the cost and providing access. You also need to think about the dynamic of the relevance of the solutions. So you've got accessibility, you've got affordability, but you've also got relevance. I was talking to someone the other day, and we were talking about in banks we look at high levels of dormancy in our customer activity. But actually, if you're going to be banking a much broader spectrum of the market that has irregular income, you've got to think about that differently. Dormancy should not be a big issue, because you're going to recognize that today someone's going to be able to transact with you. They may not transact with you for another 3 months, and then they might be back to. So we've got to. That really talks to that relevance of the solutions that we offer as an industry. So I think if we can start thinking around some of those things, around delivering the right, being more relevant from a solutions perspective, continuing to grow accessibility, driving the digital agenda. And part of that is also working to not just offer digital capabilities, but being able to support our potential customers and potential customers in terms of their access, being able to access those. Because I think what came through in the FinScope survey was still access to mobile phones is significantly increased, but there's still a large portion of the population that don't have access to mobile technology, and even when they do, it is limited in terms of its functionality and so on. But there's some really positive things happening around rollout and of mobile technology, and whether it's in terms of 4G and 5G into the more rural areas. I think as an industry we've got to do more to support putting devices into the hands of a broader spectrum of the potential customer base. And when I say devices, not just feature phones, but phones that can actually now provide smartphones that can provide access to internet and so on. So I think all of those things, if we can start continue to work on those things, I think we will start to see broader acceptance. And I think that the one other key one is, or other two key things is education around financial products and the benefit of using financial products. And then I think also a certain level of financial literacy. Because I think, looking at the FinScope survey, you saw, a big part of the population, in terms of education levels, etc., struggle with some of these concepts. So how can you provide financial literacy that educates people on some of the basics around finance and what it means when you borrow, that you have to repay, and how do you work out what you need to repay and what you can afford, and all of those things. I think all of those things are going to be really important in continuing to develop access to financial services. And then I think the other piece for me is around partnerships. So I think we don't have to do it all on our own as an industry. How do we actually work with the various stakeholders, whether it's the regulators, whether it's the mobile operators? Because I think, for me, if you really look at it, that we've only as a financial services industry, we've only scratched the surface. So I think instead of looking at what we have and arguing and trying to fight over that pie, how do we actually look to grow the pie? And I think that's the piece that we've got to be focusing on.
Yeah, I think your response on financial inclusion are quite spot on, and this brings me to this question. Stanbic Bank Tanzania has quite done a remarkable job, particularly in the intervention you have done with the Stanbic Biashara Incubator. And you've also partnered with some organization like UNDP, I think, around the same question. I think that's also very important, the role that can be played by banks around supporting SMEs. What was the inspiration behind the bank coming up with this particular product and intervention?
As a bank, we recognize that in many of the markets we operate, your SMEs, your enterprises are the real drivers of the economy, and they're going to be the growth engine of many of our economies going forward. And so in many of our markets we play quite aggressively and successfully in the SME enterprise space. I think specifically the business in Tanzania has been perceived, and I think probably to some extent rightly so, as more as a corporate bank, exclusively for the more affluent customer. But I think we recognize that to be relevant and to support the growth that is needed, we need to be more active in the enterprise segment, and we certainly believe that that's going to be the engine of growth, one of the key engines of growth in Tanzania. And so we're working hard to expand our offering to that potential customer base. So, for example, as a bank, we've recently changed all of our, for example, our account opening or customer onboarding documentation into Swahili, whereas before it was all in English. We are busy repositioning our brand to be more relevant to a broader spectrum of Tanzanian customers. And one of those key groupings is enterprise and SMEs. And also, I think what we shouldn't forget in all of that is women, because women are a big driver of SME businesses. And so there again, we see a significant opportunity, and we're working on a number of solutions to better support those segments of the market. And so the genesis behind the incubator was really to say, we recognize that these enterprises are going to be the growth engine, but in many cases they lack the expertise and the knowledge to be able to grow their businesses, and also that increasingly with some of the things that are happening in the economy, like the activity in the oil and gas industry, where there's a big push for local content requirements, rightly so. But it's all very well to say, well, you're going to offer those opportunities to local businesses, but they need to then be able to have the right skills and expertise to be able to access those opportunities. And so we've built very successful incubators in many of the markets we operate. In the previous role I had in Uganda, we started the incubator initiative way back in 2016, 2017, and it grew and was and is a huge success. And so as we started repositioning our business here, one of the key things around driving an enterprise or the enterprise opportunity and supporting that growth, we thought it was a natural need to introduce the incubator, and so that incubator provides a program for SMEs to grow their knowledge and expertise around things right from putting together a bid document to health and safety, etc. But the great thing about the program is it's not just about holding a class for a couple of weeks. We also then create those, we encourage the attendees to build relationships within their cohorts and even outside of their cohorts. We've created an environment where they can come and access a work environment should they need to, where they can also then come and share ideas. We also provide training. We provide mentoring. So we provide a mentor to each of the businesses that go through the program. Which helps them to then apply some of the learnings that they've had through the incubator program. And then, in order to make sure that it continues to grow and is a success, we've then started to partner with a number of, and you mentioned a couple of the partners that we've started to partner with. And what we've seen in some of our other markets is those partnerships have really been able to create momentum around this initiative, because there's a lot of different organizations doing fantastic work around supporting SMEs and enterprise. But how do you start bringing all of those pieces together? Because each of us are playing different roles, sometimes even duplication. How do we start actually then bringing all of that together? And we believe as a bank and as a financial services intermediator, we should play a key role in bringing that together. And then I think the last piece is that also helps us to think about where we can start bringing in funding to continue to grow this initiative. We would like to see this grow, not just in terms of focusing on certain sectors, which we've done up till now, but in moving into other sectors, also being able to move the incubator from being largely in Dar es Salaam to other parts of the country. And so we certainly see this as a really positive intervention, and we have no doubt that it's going to grow and really provide a meaningful input and support to enterprises. And the other interesting thing about it is we don't require it to be Stanbic customers. We open it up to anyone to apply to be part of the program.
Thanks. I think the program is quite remarkable, and I mean, it's going to be emulated by other financial institutions going forward, I believe so. It's the best example of how banks can play a role in trying to improve the well-being and the economy at large, because of the impact it's going to have. What sort of other interventions you've done to serve other customer segment, or rather improve these potential customers in whatever they're doing, particularly the youth and the women? From
a women perspective, I think women play a significant role, particularly in the enterprise space, in the SME space. So I think some of the interventions we're doing around supporting and growing our solutions in the enterprise and SME space will support women in business. But at the same time, we are busy developing a specific solution set or value proposition for women. We have similar offerings in other markets. We've got a very successful one in Kenya. But again, this market is different to Kenya. So we need to make sure that whatever solutions we build here are relevant to this market. And so later this year we will be launching an offering to women specifically. From a youth perspective, I think the reality is that the youth increasingly are going to be the drivers of the growth of small businesses and so on, because access to formal employment is not going to be there. I think also as we see the Gen Z come through, their view of what they want to do and what inspires them and what excites them is different to maybe my generation, where we joined a company or a business and we worked our entire lives for the business or moved around to different businesses. But I think today the youth, the opportunity is in starting businesses and growing businesses. So I think what we need to be making sure is that we offer solutions that support those aspirations, and that will be a focus for us, because as I said earlier, I think that's where the growth in the market's going to come from, And I think all of the things that we've spoken about before around access, around having the right solution set, creating understanding of an environment where people have access to understanding how to run a business, professionalize a business, etc. All of those things I think will be just as relevant to the youth as to people who are running small businesses today.
We have covered quite a lot of areas. We've talked about financial inclusion, we've talked about other areas that are quite important. Now let's talk about the business environment. In your views, what do you think are the areas that we need to, the country has to focus on to improve the business environment so it can be as conducive as it's supposed to be for investors who are coming to Tanzania and those local investors who are here?
Thanks, Dan. I think you're right. Over the last 2.5 years, we've seen a significant shift in the business environment. I remember when I landed here in 2020. Yes, we spoke about COVID, but I set myself some objectives around where I wanted to see the business, or how I wanted to see the business grow, and I landed here going, oh, okay, this is not going to be so easy. But if I reflect sitting today, I think the environment is very different to what it was then. And I think that's credit to Her Excellency the President and the government in terms of what they have managed to achieve in actually a very short period of time. I think it doesn't matter who you speak to, the view is a lot more positive. I think in business and private sector are really positive about where the country is and where it's going. And you're starting to see that. You're starting to see businesses prepared to invest in expansion and growth. You are starting to see businesses, new businesses invest, both coming from outside, but even new businesses starting up in the country, because opportunities are emerging. I think the government has really focused on the right sectors, and so as a bank we certainly are looking to support those sectors. I think what are the things that need to be focused on? I think doing what's being done is we need to continue to do that. I think we need to continue to sell Tanzania as an investment destination. Certainly, if I look at the continent, I think Tanzania is becoming very favourably looked upon from an investment perspective. I think we need to there's some work to do around regulation. I think we still need to have more. There is certainly the level of engagement with various, within sectors and across sectors and so on by government and regulators and other stakeholders is significantly improved. What I would say though, sometimes that engagement doesn't always necessarily translate into effective outcomes. So you have the engagement, but you don't always see the output of the engagement come through in whether it's regulation or whatever. So I think that's something that we need to continue to work at. I think we need to continue to work at aligning policy and regulation. I think still there is a tendency to see whether it's within across regulators, government and so on, where sometimes there's a lack of consistency around policy and around regulation, which does make it difficult to navigate. I think we need to work at reducing the amount of red tape and regulation. So how do we make the environment more conducive and easier to navigate for business? That's not to say that we shouldn't have oversight and regulation, but how do we make it more enabling? I think sometimes there's still a tendency to be quite, in terms of implementation of regulation, sometimes it's it can be a bit heavy-handed at times. I think we need to continue to work at that. And then I think the other thing for me is, from things like the tax environment and levies and all of those things, how do we continue to work on aligning those and streamlining those? That I think, and consistency again of implementation. And then I think the other one is obviously skills. We need to continue to invest in skills, because that's going to be a key ingredient of success. We can have all the great policies that in place, but we need to have the the leadership and the skills base to implement that and make it work, both from a government perspective, from a regulatory perspective, and from from a private sector perspective and business perspective. So I think those would be the things for me that we need to continue to work at. But certainly, I think where we are is a significant step forward, and I'm incredibly excited about the prospects that Tanzania has in terms of growth. And I think if you just look at the industry from a banking industry perspective, if you look at the results of the industry over the last 18 months, I think that's reflective of an economy now that is moving in the right direction. Because as key intermediators in the economy, if you start seeing the banks starting to perform better, it's still, I think if you look at our results, they are, as I say, a lot better than they were 4 years ago. But they're still not where they need to be in terms of shareholder return and all of those things. But certainly they're a good proxy for the positive strides that the economy has made in the last couple of years. Mr.
Kevin Wingfield, thank you very much. It was great to have this conversation with you.
Thank you, Dan. Really, really thank you for the opportunity to be able to have the conversation. And look forward to more conversations in time. Thank you.
Thank you very much. Dear viewers, thank you for spending time with us. It was a great session. We're looking forward to have your time once again in the next episode. Thank you very much.